It is so hot. I shouldn't even complain, but it is okay. Chicago brought the heat today. Oh my goodness. Welcome to the webinar for those of you that are here. I'm so excited. We'll get started in just a little bit. Let me give you guys a little bit of background. Let me make sure you guys can hear me. Can you hear me? I'm gonna write it in the chat room. Can you guys hear me? Because one time I was just talking my heart out. Do you hear me? I was just talking, and nobody could hear me. And I'm assuming that you guys can hear me, even though nobody is responding. But that's okay, because no news is good news, right? If nobody can hear me, then you guys will be like, oh my God, we can't hear you. So we're going to go ahead and get started for the webinar. Thank you guys so very much for tuning in. So most of you guys are here. You know what it's about. We made different posts and stuff on social media, and I host this webinar all the time. Are you overpaying taxes? Or how can you give yourself a raise, right, without your boss's permission? So it's the same thing. So literally what I said today was like over 2 million Americans, and this is according to the IRS. I'm looking up exactly what I posted. 2.2 million Americans. That's a lot of people. 2.2 million Americans overpaid their taxes, right? And so the reason that you don't want to overpay your taxes is because you don't want to miss out on what your money can be doing for you throughout the year, right? You give up on something what's called like your return on investment. If it's money that like you can be investing it for yourself, or you can be getting out of debt. So for example, let's say you're paying the government every month from your paycheck. You're paying them every single month, but then you have credit card bills that's charging you 22% interest, 13% interest. It doesn't make sense. It's like, get your money back, pay it off. And the IRS actually they actually recommend that we do that. But so many people are just so, afraid of the government and stuff like that. And I get it. And that's why I'm here to help. My name is AmmaTheCPA. I'm a certified public accountant, which means that I am certified to help the public, right? Especially when it comes to accounting and related things like that. I got a message. I thought maybe it was saying that you guys couldn't hear me. But no. So especially when it comes to accounting, certified public accountant. For those of you that don't know, that's like the highest level that you can achieve in the field of accountancy. Of course, you can go get a degree in something else, but as far as accounting is concerned, this is it, right? So I'm really proud to say that my mom is like a retired school teacher and a school administrator, and my dad is actually a retired IRS agent. So I kind of always had this passion for numbers and knowledge as well from both sides, and then also teaching, right, and really caring about people and giving back and stuff like that. So that's what brings us here. So I don't want to keep you guys too long. If you did not download a blank copy of the W-4, you can go ahead and do that now. Or if you don't have the time to like pull it up and print it out, what you can do is just take a regular sheet of paper, write down your number as we go through the W-4, right? Just write it down, and then you can always transfer it when you get a chance to print out your actual form. Then what you want to do with this form is you want to take it to your human resources department, right, and submit it to them. You submit it to your human resources department. Now, some jobs may have you actually just go online and submit the number of exemptions, as opposed to actually turning in the hard copy form, depending on the size of the organization that you work for. Okay, so it really just depends. Like, I work for the school system. It's pretty big. It's just like any type of governmental agency. So what they do is they have us go online and just enter in the number of allowances that we're changing it to. So whichever one is for you, right? If you have to fill it out, then you can do that, or just go along with the form, write down a number and plug it into your HR department. So we're going to go ahead and get started. Okay, so also, when we're going through the webinar, if you guys can do me a favor, write down any questions that you have related to any tax issues. Honestly, that's kind of my thing, right? Is taxes, which is so funny because I used to be so afraid of tax. Like, I remember taking the CPA exam or even studying in school, and I was just like, oh, I do not want to do tax, you know? And then it ended up being one of my favorites. It was kind of one of those things where I had to force myself, right? Your growth is outside of your comfort zone. That's just a sidebar. So who knew, you know, that tax would really become my thing, but it is. So what you guys, so I totally digress. Write down any questions that you have related to taxes or anything related to the W-4. I get different inboxes asking me how people can lower their taxes even lower than what we're doing here. And I can explain that as well. But definitely feel free to ask me any question at the end. Now, I won't be able to hear you, but I'll be able to see you. Hello, Larry. Hello, Larry Wells. Okay, you guys can hear me. Hello, thank you for joining. So what you want to do, write down any questions and then you put them in the chat room like Larry just did. You put them in the chat room and then I can get to them after the webinar. Okay, so let's go ahead and everybody grab your W-4. If you don't have it, like I said, then we can go ahead and you know, just use a regular sheet of paper. And my mentor actually told me I need to post a W-4 on my site. So that's coming real soon, next week. Y'all hold me to it. Okay, so grab your W-4 and I'll walk you guys through it. Okay, so let's get started with line A. For line A, you want to go ahead and enter in a number 1 for yourself. Line B, enter a number 1 if you're single and you only have one job, or if you're married and have only one job and your spouse does not work, or if your wages from your second job or your spouse's wages or the total of both are $1,500 or less. Then you want to enter in a number 1 right there. Okay, if those apply to you, then you want to go ahead and enter number 1 on line B. So for line C, if you are married, enter a number 1 for your spouse. Now this only applies if you are married and you file a joint tax return. Then you want to go ahead and enter in a number 1 right there. Okay, and that's for line C. Now for line D, enter the number of dependents that you plan on claiming on your tax return. Now, dependents are not you or your spouse, even if they don't work, okay? Or even if you don't work and you're married and filing a joint tax return. Dependents is just people that you are taking care of, mainly children in your home, but also any other relatives that may be living with you that you provide food and clothing for and shelter. So you want to enter in a number 1 for the dependents other than not including you and your spouse that you claim. So put that number on line D. So on line E, enter a number 1 if you file head of household. Now, you know if you filed head of household in the past. Okay, so if you did file head of household in the past, or you plan on filing head of household for this upcoming tax year, then go ahead and enter number 1 right there. Okay, now we are on line F. So for line F, you want to enter a number 1 if you have at least $2,000 of child or dependent care expenses for which you plan to claim. So this is basically child care. This is child care. So if you pay for, even if your child goes to half day preschool and the rest is half day child care, then you want to include that as well. So any child care that you pay, if it's more than or at least $2,000, then you enter in a number 1 on line F. Now for G, this is for the child tax credit. Okay, so if your income is less than $70,000 or $100,000 if you're married, then go ahead and enter in a 2 for each eligible child, then deduct 1 if you have 2 to 4 eligible children. So for example, if you have 2 children, then the number would be 4, but then you want to go ahead and deduct 1 if you have, because you have 2 children. Okay, and then deduct 2 if you have 5 or more eligible children. So if you have 5 or more eligible children, then you still include 2 per child, and then you deduct 2 because you have 5 or more children. Okay, now if your income is between $70,000 and $84,000, then you just want to enter in a 1 for each eligible child. And if you're married and your income is between, your joint income is between $100,000 and $119,000, then enter in a number 1 for each eligible child. Now for H, you just simply want to add lines A through G. So I'll give everybody a second to add those lines. Add up lines A through G and put the total on H. Okay, moving right along. Turn to the back for the deductions and adjustments worksheet. So for line 1, now this is where you want to include any, if you file a Schedule A, this is where you want to include if you plan on filing a Schedule A or if you have filed a Schedule A in the past, which is for itemizing your deductions. So for line number 1, you want to enter in the total estimate of your itemized deductions, right? So what you want to do, if you filed a Schedule A last year, then you can go ahead and pull that out, and you want to put the number from line 29 on your Schedule A right here for line number 1. If you did not file a Schedule A last year, if you did not itemize your deductions last year, and you aren't sure what you are going to, you can use the estimate based on your mortgage interest and charitable contributions of the year. Now for line number 2, enter in $12,700 if you're married and filing a joint return, or also enter $12,700 if you are a qualifying widow or a widower. Enter in $9,350 if you are filing head of household. And lastly, and not least, definitely not least, you enter if you are single or if you're married filing separately, you want to enter in $6,350 on line number 2. For line 3, we simply want to subtract line 2 from line 1. Now, if you get a negative number, you want to put 0. We do not want a negative number on that line. So if you get a negative number or less, or 0 or less, if you get 0 or less, then put 0. For number 4, this is specifically if you have a home-based business. You want to enter in an estimate of your adjustments for the year to income. Any adjustments that you have for income. So only if you have a home-based business do you want to fill this in right here, because we can take our deductions throughout the year instead of waiting till the end of the year for a refund. So you want to put either $4,050 or $20,000. So let me explain the difference. If you are new to having a home-based business and you aren't really sure what you get to write off or how much you're going to write off, then you want to put $4,050. If you've had a home-based business in the past, or if you just know, even if you're new to the business and you know that you are going to really work your business to try to generate an income, then you want to put $20,000 on line number 4. Now simply let's add lines 3. For number 5, we want to add lines 3 and 4 and put that total on line 5. For line 6, you want to enter in an estimate of any non-wage income that you have. So basically this is dividends or interest. If you have any dividends or interest or any other non-wage income, then you want to go ahead and put that for line number 6. For line number 7, simply subtract 6 from 5. Line 6 from line 5. Again, we do not want a negative number right here. So if you get 0 or less, then just enter in the number 0. Moving right along, line 8, you simply, let's divide the amount that's on line 7 by $4,050 and do not include a fraction. Now for line number 9, enter in the number that we had on the front that was line H. So go to line H on page number 1 and bring your total to the back side of the page and put that number on line number 9. And now you want to add lines 8 and 9 for number 10. For number 10, add the totals that's on line 8 and line number 9. Add up those totals. Okay, now this is the end of the bag. We do not want to fill out the 2 earners portion of the W-4. So this is it. So for the back side, so now the number that you have for number 10, let's go back to the front. Go back to page 1 and you want to put the amount that you have on line 10 on line number 5, which reads total number of allowances you are claiming. In parentheses from line H above or the applicable worksheet on page 2. So we want to put the number, the total number of allowances that we are claiming, write that number on number 5. And now, ladies and gentlemen, that is it. You can fill in the rest of the information that's on the bottom portion of the first page of the W-4. Your first name, last name, all of that personal information. You complete that and turn it into your job tomorrow. Okay, at this time, we'll take any questions. Oh, hello. Okay, so just went through our W-4. Now, a couple things that I do want to point out. The main thing with the W-4 is that you really wanted to mirror what your tax return will be for 2017. Okay, so for example, if you, because I get this a lot. I know a lot of couples that, or they used to be together, now they aren't together, and they alternate the kids, right? So if you alternate the kids, maybe one year you will file head of household, and one year you don't file head of household. So if this is your year to file head of household and claim the kids, then you want to adjust your W-4 to reflect that. Same thing if this is not your year, then you don't want to adjust your W-4 to reflect that. A couple things with head of household. To be head of household, you have to actually have a dependent. Okay, it has to be either a dependent like your child, or it has to be a qualifying relative. So I know a lot of people, some men, right? Men may feel like, oh, okay, well, I'm head of household because I'm the man of the house, right? That doesn't necessarily mean that you can file head of household according to the IRS, right? So if you are, in order to be found married filing separate, married filing jointly, then you have to be married and you're filing your tax return together. So that is the largest tax exemption that the government has, okay? The second one after that is head of household. So like I said, in order for you to claim head of household, you have to have a qualifying dependent. So this can be your mom. If your mom lives with you, you're taking care of your mom, and you provide more than 50% of her care. That's the main thing, is 50% in order for you to claim head of household. So if that's you, then yes, definitely claim head of household. Unfortunately, a lot of single people want to claim head of household because they're like, well, I'm the head of my household, right? And technically you are, but according to the IRS, that does not count. Okay, so according to the IRS, if you do not have a dependent, whether it be your own child or foster child or a qualifying relative that you are taking care of more than 50% of their care, okay, a relative, then you are not head of household. You can't claim them. I'm so sorry. So that's what I wanted to point out for the head of household. The other thing for the child tax credit, right, and the child dependent care expenses. So that's basically for when you have like some type of actual child care. So any type of daycare facility, after school care, stuff like that, that can qualify you for the child tax credit. Okay. And then I want to say, don't quote me. Let me see if I can pull it up real quick. But child tax credit, I want to say it stops around 12. You can't be like 13 with the head. Let me see. I believe it stops at 12. Let me see. Just to be sure. I don't know. Okay, so 16 years or younger. So they have to be 17 or younger, right? That's for the child tax credit, but the child dependent care expenses is the one that I was really thinking about. So the child dependent, let me see, what's the age limit on that one? Okay, 13. So right, so if your child is 13 or less, then for the child dependent care, and that's like daycare providers, babysitters, summer camp, stuff like that. But the key is that age limit. So once they hit 14, then you can't get that. But then the child tax credit, you can still take that. So that's on the front part of the W-4. And now these exemptions are just things that you get anyway. If you aren't sure if you get them or not, you can always go to your tax return and actually look. We actually just filed our taxes. Hey, Jamal. We actually just filed our taxes a couple months ago. I don't know, April, right? So you can go back and look at your tax return and see if you got the child tax credit, if you got the child dependent care expenses, and then you can use that on your W-4. Okay, we have a question. Good evening, Jamal. Okay, so a question regarding how to determine the allowance regarding the home-based business. Where did we come up with the 20,000 number versus the 4,000 number? Excellent question. Okay, this is where we came up with it. So basically, when you feel, okay, so for anybody that doesn't know, let me just explain real quick. When we went over number 4, that's specifically for if you have a home-based business. Home-based businesses get so many tax deductions, way more than just a regular individual. So what we do on that line is we estimate how many deductions do we think that we will take throughout the year. Now, the 4,000 versus the 20,000 is not necessarily money out your pocket. This is just tax deductions, that things that you can write off, probably that you're paying for anyway. So for example, like my Wi-Fi, right? My cell phone. I'm at my office space, right, at my home, so I get to write that off. So different things like that, and of course mileage that you would get to write off anyway. So how did we come up with the 4,000 versus the 20,000? 4,000, every 4,050 will get you one extra exemption. That's why on that one line it asks you to divide your total number divided by 4,050. Yes, these are business expenses, but the good thing about having a home-based business is that you get to turn ordinary expenses into tax write-offs. So for example, my cell phone, right? I would have a cell phone whether I had a home-based business or not. But because I do, and I know that 8 out of 10 calls that I make are to different business partners or prospective business partners, then I'll write off 80% of my phone bill. So it's different for everybody. It depends on how involved you are with the business. Okay, so the $4,000 is for somebody that is new to having a home-based business. You just don't know what you're going to do. You don't know what you're going to write off. It'll only get you one extra exemption. So one exemption is not crazy where you are getting out of hand. You know, you're new to the business. You're new to having a home-based business. You don't even know what you're going to do, right? Now, honestly, you probably can get $8,000 in mileage alone, okay? Just from going to different meetings, going to different home events, going to meet different prospects and stuff like that. But again, if you have no idea what you're going to do, you're new to the business, then you can go ahead and do the 4,050. With 4,000, that'll get you one extra. That'll get you one extra exemption. Now, the 20,000 is for seasoned vets in the home-based business industry, seasoned people like me, yourself, Jamal. And I'm not super seasoned like that, but I have been in a home-based business for a while. And I know what I'm going to write off, okay? I know all the trips that I took. So last year, I wrote off about $20,000, right? So for this year, it'll probably be even more. And what you can do, if that's the case, you can always go back and adjust your W-4, because human resources, your payroll department, they cannot tell you, oh, you're filling this form out too many times or whatever. So what you want to do is, right now we're in June. Okay, so let's say you adjust your W-4 today. Come time August or September, 3 months from now, September, you can kind of see like, okay, so what do I have to write off at this point? What can I write off on my tax return in April or in January when tax time comes around again, after you kind of look at different things that you have personally done in your business, your cell phone, your Wi-Fi, any trips, your auto ship, stuff like that. You take that into consideration. Now, if you get to the point where it's, like I said, it's September and you haven't done anything except pay your auto ship and you put 20,000, then maybe you want to change it to 4,000 because you really haven't done anything in the business to get that 20,000. But if come time September and you've been going to different home events, you've been meeting with prospects, you got business cards, you got supplies expense, you got brochures, you have your auto ship, you've been making a lot of phone calls, you've been on a lot of webinars, stuff like that, then you want to go ahead and you can increase it. So you can always increase it or decrease it based on your actual performance in your business. Okay, so I hope that helped. Jamal. Let me know if it didn't. If you have another question, you can go ahead and put it in there. Or if you need a little more clarity on the 20,000 versus the 4,000. But that was an excellent question. And yes, definitely, you want to take advantage. Thank you. Okay, dope. That's what he said. You are so very welcome, Jamal, anytime. So that's basically the whole thing, by having a home-based business, like I said, you get so many extra tax deductions that it's not even worth it for you not to have a home-based business, especially when you want to lower your taxes and earn extra money, because you can do it very easily or simple. It's very simple, right, for you to start a home-based business and take advantage of these deductions. And like, I didn't even say, the home-based business that I'm a part of is my econ. And me being a certified public accountant, the thing that I love about it is that we totally work on people's finances. It's the personal financial success company. So it's not a lot of hype. We aren't selling a whole bunch of tea or juice or wraps or, all that other stuff. Now, don't get me wrong. A lot of that stuff is cool. But at the end of the day, when we do different things like that, we do it because we want to be rich. We do it because we want to work on our own personal finances. So what better than to be with a company that's all we do is work on personal finances. So we teach different strategies like this to lower your tax liability legally. Then we also teach you how to earn additional income. And then ultimately, we teach you how to become investors, because none of us wants to work the rest of our lives, right? We have to start putting money up for our retirement so we can have our retirement investments working for us, and we're just generating income and living off that income. At the very least, when you retire, you want to be making how much you're making now. So I hope that was helpful for everybody. If we have any more questions, please go ahead and post them in the chat room. And then we can answer them for you guys. Let me see, any more questions? And it's so funny. I always get questions after the webinar, like people don't want to say their specific situation in front of everybody, and that's fine too. If you email me, you can respond to the link where you subscribe to the webinar, and that comes directly to my email, and I can respond. And that also goes for the replay as well. Last week or a couple weeks ago, I missed a couple emails, and I'm so sorry about that. I don't even know how I did that. But now I cleaned out my inbox, and so I'll be sure to get back to everybody with any questions. And you can also inbox me on Facebook. My name on Facebook is my full legal name. It's Amma Nantwi. And then on Instagram, I'm AmmaTheCPA. So feel free, shoot me a direct message or an inbox on Facebook, or respond to the email, whatever is more convenient for you. And I can take care of any questions that you have. If somebody puts you on the line, one of my business partners, then you definitely want to get back with them. They can help you get any of your questions answered and hopefully get you started real soon so you can start taking advantage of some of these tax deductions. And then what you want to do, if you just saw it, right? If you saw it somewhere, maybe you saw it on my page, or maybe I invited you, then get back with me and I'll get your questions answered. Okay, we have another question. Abdul, hi. What about people that already work 2 jobs and have a home-based business? Thank you, Maddie. I appreciate it. Thank you so much. Abdul, can you clarify your question for me a little bit? I'm not sure exactly what you mean when you just say, what about the people that already work 2 jobs and have a home-based business? They can still fill out the W-4. If that's what you mean, they can definitely still fill it out. That's a very busy person if they have 2 jobs and a home-based business. But definitely they can still fill out the W-4. Let me see. Jason, if you have a question, I see you got a request. Jason, if you have a question, go ahead and post it in the chat room, and that's where I can see it. Abdul, if I did not answer your question, please just clarify, and then I can, okay, thanks. Okay, you're welcome. Answer it. Yeah, absolutely. They can fill this out. You know, you just want to fill out a W-4 for every job that you have, you know, because every job that you have is taking taxes out. So this applies to everybody. Okay, Jason. Oh, good. I'm so glad. Thank you, Abdul. I appreciate it. Okay, if we have any more questions, I did see a request from Jason, but I did not see the question come up. But if not, you know, like I said, you can always reach out to me directly through the email. Okay, what do you put for number 6 on page 1? Number 6 on page 1. I'm sorry, let me grab my W-4. Number 6 on page 1. It's the letters on page 1. You mean F? Okay, if you mean F, that's for the child or dependent care expenses. And that's the one where your kids cannot be over 13, and it's for taking care of them in the day, you know, so daycare, day camp, babysitting, different things like that. That's the child and dependent care expense. So if that's the one you're talking about, okay, so 1, 2, 3, 4, 5. Child dependent care expenses, then you would just put 1 for 1 kid. Let me see, I believe it's line 6 on page 1. That should be 0. So, Jason, if you take a look, I'm so sorry you guys won't be able to see it, but ask me, like, what line are you specifically talking about? Like, not the number, but what does it read? Because on the front, it's the alphabet, and then also on the front, it's talking about the child tax credit and the child dependent care expenses. So if I go 1, 2, 3, 4, 5, 6, that's F, and that's asking for the child or dependent care expenses. So it depends on if you have a child or not. So if you have a child, let's say you have a child and you know that you pay more, $2,000 or more in different child care expenses. Oh, number 6. Oh, no. Don't put that. Okay, got it. Definitely, you don't want to put anything right there, because that's asking you, do you want to have them hold an additional amount? So some people, let's say you always owe the government, because some people, it's actually 2 coins to this, right? Or 2 sides of the coin. So most Americans will overpay their taxes throughout the year and they get a refund. But it's also another group that don't overpay their taxes, and they underpay their taxes. Maybe they make a lot of money. They aren't aware of the different tax write-offs, and they don't know how to really take advantage of the tax code. So they end up paying the government. That's normally people that make a lot of money. So when people make a lot of money, or they just don't know how to take advantage of the tax code like we do, right? Then they'll have the government withhold their money from their W-4, like just everything that we went through. And then for number 6, like you said at the bottom, the part that you tear off is just saying an additional amount, if any, that you want to withhold. So for the person that makes a lot of money anyway, and they always owe the government at the end of the year, then they may withhold an extra $100 per paycheck just in case, you know. But even if you end up owing, just so you guys know, it's better for you to pay at the end, especially if you have a home-based business. I'm so glad you asked that question, because if you have a home-based business and you owe money at the end, what you can do, you can put up to $54,000 into a retirement plan for yourself, right? And then you don't even have to pay the government. So it's like, if you have the money to write the government a check, then write it to yourself. So I wouldn't put anything right there, whether you habitually owe or not, because like I said, if you end up owing at the end of the year, you pay yourself. That'll reduce your tax liability even lower, and then you won't have to pay taxes. So yeah, home-based business, we get to write off $54,000 into our retirement account, where when you don't, it's like 18,000, something like that. Okay, Michael, thanks for this information. You are so very welcome. Have questions, can't think of them now. Okay, that's cool. So if you can't think of your questions right now, Michael, thank you so much for joining. And everybody, thank you guys so very much for tuning in. Michael, if you think of your question later, then just inbox me on Facebook, AmmaNantwi, or AmmaTheCPA on Instagram, or you can respond to the email that when you subscribe to the webinar. So if we don't have any more questions, then we will go ahead and get out of here. Thank you guys so very much for tuning in. I hope this was helpful. Going once, twice. Okay. Good night, guys. Have an amazing, amazing evening. Thank you guys so very much for tuning in. Good night.